Hello and welcome everybody, I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to this video today, and please don't forget to like this video and subscribe to my channel. That will be really appreciated. So in today's video we're going to be talking about what happened in the markets last week, and we're also going to be discussing a little bit more about our strategy overall and also talk about various positions in our portfolio. So to get things kicked off, last week was an extremely difficult week overall for the stock market, and the NASDAQ was down about 2.8% and the S&P 500 was down about 2.4%. Our portfolio actually performed very well considering the situation out there. We've had over 6 consecutive weeks of market drawdowns in terms of the major indices. And actually, this is the biggest losing streak on record since 2001. So our portfolio actually did quite well. It was about flat overall for the week. And the reason why I'm quite proud of that result was the fact that the major indices were majorly down, as I mentioned. And also crypto was majorly down last week as well, mainly to do with the lunar UST situation that happened last week. And in the crypto section of this video today, I will be focusing on that rather than the general news of what's happening in crypto, because that had a substantial effect last week on the crypto market overall. So the reason why our portfolio held up fairly well last week was European stocks performed quite well last week, and we have quite a few European stocks in our portfolio. We also had some really good movement from some of our stocks last week, such as Nomad Foods, which is one of our largest stock holdings in our portfolio, and that was heavily up last week. So now I'll move on to the global weekly market updates, and I will start off with the US. And last week, the US markets, as I mentioned, were heavily down. And the big reason for that is that many people are very skeptical about whether the Fed can raise rates without slowing down growth and without the economy going into a recession. So there is a lot of fears about that at the moment. I mentioned in my video last week what I think might happen. I think that they will continue with the schedule to increase those interest rates, but I think we will see some slowing of growth and we will see some spluttering of the economy. And then I think what will happen from there is it's quite likely that the Fed will have to put a halt or slow down the interest rate rises in order for the economy to be able to continue to thrive. So I think that's going to happen overall, but I think especially over the next couple of Federal Reserve meetings, they're going to have to do all that they can in order to try to combat some of that rising inflation. As we're on the subject of inflation, last week we saw the release of the inflation CPI figures, and they came out at about 8.3% on a year-on-year basis. And that was compared with the consensus estimates of about 8.1. So it was higher than estimates. However, the Fed did have a good narrative because that actually slowed down from the pace of March, which was about 8.5%. So it is showing that inflation is starting to taper off slightly and is starting to slow. However, I think that the Federal Reserve do a lot of manipulation of the results, and they strip out certain things from those inflation figures. And it was also more inflation data was released that key areas such as the service sector was starting to see more inflation creep into the economy. Obviously, the first things you see is in terms of products, because products go up in price as the cost of raw materials, energy, etc. increases. However, we are starting to see those quite strong rises in service type products, and this is showing about a 0.7% rise. And if we look at certain sectors, there is a lot more inflation than others. So if we look at the airline sector, for example, just last month we saw an increase of 18% in terms of the cost of a ticket for airline services. And again, a lot of this is to do with inflation. We've got increased staff costs as there's a shortage of staff, and also airlines have a lot higher costs now, such as the fuel cost, which has obviously gone up a lot over the last couple of months. So inflation is really seeping in around the whole of the economy. And just to simplify things, I think you can see that inflation is caused by a number of issues. So I will just summarize them quite quickly. The first one is slowing growth overall in the economy. And then we are seeing supply chain issues, which have creeped in, especially considering COVID-19 is spreading around China, and they are having mass lockdowns, which has an effect overall on the supply chain. You also have the Ukraine-Russia situation as well, which is weighing on the markets. You're seeing an increase there in energy costs, natural gas, which always finds its way back to the consumer somehow. And then also you're seeing this kind of interest rate fears around and monetary tightening, which has an effect overall on the economy as well. And this also does seep out into the inflation data. And at the low point of the S&P 500 on Thursday, we actually saw the S&P 500 actually go on a year-to-date basis down about 18%. And this is just 2% short of a bear market, or what would be classified as a bear market, and over 20% fall. And the NASDAQ has been in that territory for a long time, in the bear market for at least a couple of months. And that's at about minus 25%. However, on Friday, we did see a bit of a rally overall in the stock market, which has brought those S&P 500 losses down to about 16%. It was also last week released a University of Michigan survey, which measures consumer sentiment. And last week, those figures showed that consumer sentiment was down at about 59%. And that was from a consensus estimate of about 61%. So you can see it is a much lower reading than was expected. And this again is down to a number of different reasons, but many people think that we might be approaching a recession, as well as those inflationary and those supply chain bottlenecks which are currently in place, and those rising energy costs, etc. So that is all weighing on sentiment. And this was at the lowest levels for 13 years. So this is really showing that there's quite a lot of fear at the moment in the market. And this can bring a lot of opportunities, because often during these times of fear, you get people really, really worried. They start to sell off their stocks. They start to become really, really bearish. And often this is the time of the most opportunities, because the markets, just like they do to the upside where people get euphoric, they do the same as well to the downside, and people become too fearful. And it just takes a little bit of good news or a reversal, some of that bad news that has been already priced in the market, for us to see a good bounce overall in the stock market. So I would try to be as optimistic as possible. I keep trying to add to my core positions at times of weakness. And as I do on times of real heavy strength, I try to sell and take profits as well on some of our key stocks and positions as well. So I do the opposite on when there is a lot of fear, and I try to take advantage of these opportunities and buy in at lower prices. And although nobody knows when the exact bottom is, I think it's much more prudent to be buying in close to these levels than it was to be buying at those all-time highs when sentiment was really high. And I see that the risk actually reduce when you actually get lower entry prices, as long as you are extremely confident in your overall stocks within your portfolio and other asset classes. As we move on to Europe now, and last week the European indices were generally up for the week, and this was a lot more positive result from Europe than we have seen over the last couple of weeks or so. There was some positive news from Europe last week, with Finland announcing that they are very shortly going to be joining NATO. This has been discussed for quite a long time, but that looks like that is going to go through right now. We also saw some discussions in terms of Russian oil embargoes, which I had been talking about over the last couple of weeks within my videos. It looks like the Russian oil embargo in Europe is going to be slightly delayed or put on pause at the moment. And that is because there is a lot of opposition from certain countries such as Hungary and the Czech Republic, who have a very heavy reliance on Russian oil. However, on the flip side of that, we've also seen the Russians have decided to place an embargo on Europe in terms of natural gas, and they have actually shut down one of their key pipelines which they use to transport natural gas to Europe. So they are taking a very hard stance on Europe as a repercussion of some of those sanctions that have been placed over the last few months on Russia. And I think it's quite likely that we're going to see another spike up of natural gas prices over the next month or so because of this, because the supply is going to really squeeze. There was also a speech last week by the president of the ECB, Christine Lagarde, who said that those bond purchases were going to stop in Q3 2022, which is in line with what everybody has been expected, and as what they've been saying over the last couple of months or so. They also said that they are likely to increase the interest rates in the EU around about July, and this has had a lot of support from many of the major banks around the world and the central banks in Europe. So it's quite likely that those interest rates are going to continue to rise around about July and in the summertime, which should help to put a lid on some of the heavy inflation that they've been experiencing in Europe. We're also seeing a spluttering of the economy in the UK, and GDP actually contracted about 0.1% in March, after the previous month it had stagnated. So we are seeing a shrinking overall of the GDP due to conditions overall in the economy. We also saw on a quarterly basis that in Q1, the economy in the UK grew by about 0.8%, and this was compared with consensus expectations of about 1.1%. So clearly that growth is starting to slow. As we move on to China now, and last week the Chinese market actually did quite well. And the reason for that is that the cases of COVID-19 are continuing to fall, which is kind of expected considering that China has been in quite strict lockdown over the last month or two. And this dropping off of cases gives fresh hope and optimism that some of those lockdowns are going to be discontinued in the future. It was also announced by the Chinese Regulatory Commission that they were going to do their very best to bolster the amount of institutional investment in the Chinese stock market and economy. And this was seen as a major positive last week and provided really positive sentiment. However, there was some data released last week from China which said that credit demand has fallen quite significantly within the last quarter. And again, not very surprising considering that the economy has been basically shut now for the last month or two. And it is quite expected that people are going to borrow less money and that conditions are going to be a lot tighter. We also saw export growth actually plunge by 3.9%. And that is due to a lot of those supply chain constraints that they have in place and the effect on manufacturing that has happened because of these COVID-19 lockdowns and the other parts of the supply chain process, which has really slowed down those exports to other countries. We also saw another major inflation metric, which is factory gate inflation, which increased to about 8.1% in April. And again, this is to do with those lockdowns and those supply chain constraints that are in place. And this has really caused the cost of, raw materials, energy, and many other things to actually rise. And this has caused a drop off in activity and increase in that factory gate inflation, which we often see first of all in China, and then this does tend to seep out into the rest of the world economy as we start to see a shortage of products that are coming out of China. So it is a forward-looking metric which can show what might happen in the future in other markets. As we move on to the top 3 performing stocks of last week, and the top performing stock of last week was Nomad Foods, which I mentioned at the top of this video, and that was up about 19.4% for last week, and that was on the back of a really positive quarterly result which was released. And that is very good for us in terms of our portfolio because it is one of our highest weightage positions, and that had slumped over the last couple of months but was particularly a lot better now because of those results that have been released. The second best performing stock in our portfolio last week was the 𝘃𝗶𝗀𝗃𝗀𝗀, which was up about 15.3%. The third best performing stock in our portfolio last week was Ambev. And Ambev is a Brazilian beer brewer, which has a very strong footprint around South America and also Central America. And that was up about 7.2% last week. And actually, Ambev is having a very good year, as is the rest of the Brazilian economy as well. So I'm very bullish on that stock for the rest of 2022 and beyond. So as we move on to crypto now, and in today's video, I didn't want to talk about the general news of what happened in crypto last week, as I usually do, because last week it was really dominated by one very specific but very difficult situation, which happened for those Luna and UST holders. And really what happened last week was an unraveling of the whole Terra ecosystem. So really what happened is we saw a massive drawdown in the Luna price to practically zero. If we look at it, it was at just over 120 just a couple of weeks ago, and now it is trading at a fraction of a cent. And what really caused that is an unpegging of UST, which is the Terra stablecoin. And the Terra ecosystem is very complicated to explain. And I actually released a post about it this week to explain exactly some of that mechanism. But basically what happened is that over the last couple of months, the UST had grown to become the third largest stablecoin in the market behind US dollar Tether and also USDC. And it had continued to see more and more inflows of money. And what the way that the mechanism works for Luna and UST is that when UST inflows are increasing over time, then more and more Luna is burnt, and this is being able to be traded by traders on a $1-to-1 basis. However, it is important to note that UST is actually an algorithmic stablecoin, and algorithmic stablecoins are very different to the traditional stablecoin. For example, whether you believe it or not, there's a lot of debate about that, but US dollar tether is supposed to have $1 for every US dollar tether that has been created. However, algorithmic stablecoins don't work that way. And UST had no dollar reserves in their treasury, for example. And what happened is that it is quite likely, and there is a lot of rumors going around, that there was an attack on UST. And this has been said that this could have been from BlackRock and Citadel, but they have categorically denied that they were involved in this attack. And what happened was allegedly that they increased the buys in UST, so it continued to increase and burn the lunar supply, for example. And then what happened is they then pulled this liquidity overall from the UST. And this caused this kind of slight depegging of the UST to US dollar price. And then after that kind of depegging, we saw a lot of capital outflows coming out of UST. And this caused kind of a real death spiral in the price of Luna. But as you can imagine, as capital increases into UST, you then have the burn mechanism where the supply of Luna actually decreases and hopefully makes your Luna more valuable. The opposite happens when there are capital outflows. And as people continue to try and trade in the UST, as there's a lot of panic in the market, this actually caused a major dilution of the Luna token. And this caused a major dilution of the Luna token because they were effectively increasing the supply of Luna as part of that UST and Luna mechanism that's in place in order to be able to try to keep closer to that peg, to try and support that peg. But they were not able to achieve it. And this effectively printed trillions of Luna tokens, which has basically wiped out all the value. And it really kind of caused a death spiral as they weren't able to support that peg of $1, and more outflows happened, which caused more and more dilution. And I'd mentioned many times in my videos that Terra Foundation had been buying large amounts of Bitcoin. And it is not known very specifically how much of that Bitcoin in the reserve they actually sold in order to try to support that UST peg. However, we do know that there were movements from the Terra wallet into major exchanges. So we're waiting really for some clarity from the Terra team, exactly what happened to that Bitcoin. But I don't think it was a coincidence that we did see a big drop overall in the Bitcoin and in the crypto market, not only because there was some fear, but quite likely that there was some selling pressure overall from the Terra Foundation. And this has really kind of caused shockwaves around the industry, that a top 10 coin such as Luna, it was able to suffer to this degree that it has since that drop this week. And there were some announcements by Do Kwon, who's the leader of the Terra Foundation. And what he has basically said is that they had to absorb as much of the selling pressure as possible in UST. And eventually it just wasn't possible that they were able to defend that peg. So what's going to happen now? And there are a lot of discussions now about the way forward for the project. And I think it's quite clear that the project cannot survive in its current form because the dilution of the Luna token has been so severe, and that US T is so far off its peg now that it's very unlikely it would take huge amounts of capitals to be able to get UST back to its peg. And I believe that in the early stages of last week, they were looking at potential bailouts from some of the large crypto companies in order to get a lot of inflows again of capital and to support that UST peg by selling Luna to them at a discount, for example. However, as that price and that faith in those cryptocurrencies reduced quite dramatically, it became an impossible task. So what's going to happen now? It looks quite likely that they are setting out plans for what might happen in the future. There was a plan that was actually outlined by Do Kwon over the last couple of days, which he put out a proposal to the overall community that they could create a fork of the project and they could reduce the new Luna tokens in that fork to around 1 billion token supply, which is obviously much less than the dilution that has taken place now. However, how that is going to be distributed to current UST holders and to Luna holders is yet to be completely decided. And I think it's going to be very interesting to watch that over the next couple of weeks. But it's very clear that a lot of faith and a lot of confidence has already been lost in the Terra ecosystem. And I'm not sure how likely it is that people are actually going to come back to that ecosystem and hold a stable coin, whether that's UST2 or a similar type of algorithmic stable coin in the future, because it's quite clear that it has been a failed experiment for, in particular for UST. And when you lose confidence in crypto, it is very hard to get that back, especially when people around the world have lost, really vast sums of money. So on that subject, I just really want to say that during that week, last week, I actually made a small sized trade in Luna. And again, it was a very small trade. It was just about 0.6% of our portfolio. And the reason why I made that trade was the fact that I thought it was an asymmetric bet. And that means that I thought that the upside was much greater than the downside. And although I still believe that to be true, because if they would have got a big influx of new money from institutional investors, they might have been able to salvage it, and we might have seen a large increase in the token price. It didn't work out like that, and obviously we saw a reduction in the Luna price to almost zero. So this caused a major drawdown of that trade in Luna in our portfolio. So I just want to apologize about that. It's not going to have an outsized effect on our overall portfolio in the future, because it was such a small trade. However, in hindsight, I probably shouldn't have taken that risk, albeit quite small in terms of our whole portfolio. So I will be a little bit more careful in the future about these types of trade. But I like to be transparent and honest in approach. I would never take a trade which would put heavily jeopardize our portfolio as a whole. And that is why, as a portfolio manager, by managing the size of our trades is almost as important as having conviction in your trades, because they can always go wrong, like in this situation. So I just want to be honest and transparent about that. And I think it's really important that as investors, we learn key lessons from this. And I think that's why it's important to have a lot of diversification in your portfolio, because sometimes these black swan events can happen. And I've heard a lot of people saying, was Luna and UST and the Terra ecosystem a Ponzi scheme? And I don't think it was, to be honest. I think the main issue with the UST and Luna and the whole Terra Foundation was a problem with the overall mechanism of the algorithmic stablecoin and the way that they worked in tandem with each other. And sometimes it is a flaw in the overall system that can take down these types of cryptocurrencies. And it doesn't mean that it was a scam and that it was money grabbing specifically from the Terra Foundations and its owners, although obviously they did profit probably very largely from it. I don't think that they expected it to decrease the way it has, and sometimes it is just a flaw in the way that the system works. So if you did lose a lot of money personally outside of our copy in UST or in Luna, my sympathies go out to you. And it is very important that you do note that sometimes this can happen in crypto. And that's why we know that the gains can be very high in crypto, but there are also certain risks. And by spreading your money out in different projects, it does allow you to be able to not be as overly affected if something happens in the future. We also saw Bitcoin, which was down about 18% overall for the week, actually went to a low point of about $26,000 last week. And we have seen a bounce back since then. And it happens a lot when you have these major blowouts of projects, or you have a lot of you have an exchange hack, for example, and then when there's a lot of fear in the market, you can see these very steep declines overall in the crypto market cap and in Bitcoin. However, when sentiment is very low, it is often at the greatest buying opportunity. And I do expect Bitcoin to stay above those $25,000 levels. It is possible that it could go lower, but in no cycle that we've had in Bitcoin so far have we seen the low of the Bitcoin price actually go below the high of the previous cycle high in terms of Bitcoin, which was up about $20,000 at the end of 2017. So I think it's very unlikely that it goes below there. And I think that it's quite likely to hold that support around the $20,000 mark. However, it's very important to stay as patient as possible with the crypto markets during these times. And it may feel like it's going on forever and it's only going down. But these markets can snap back quite violently, especially when there is a lot of fear in the market and a lot of those long-term holders start to buy a large amount of Bitcoin. And some of those speculators that have been in the market for, short 6 months or even a year, who don't have that conviction in cryptocurrency and in Bitcoin, they start to sell. But the floor often starts to be made by these long-term hodlers and crypto natives who are buying up a larger amount of the supply. So please be patient as we see the crypto markets play out over the next couple of months. However, I am still positive about crypto moving forward, and I think that it will do very well for our portfolio. However, volatility is something that does play a part. I also want to say that I'm making one very small change to our portfolio over the next couple of weeks, and that is that I plan to remove our dash position from our portfolio. And there are two main reasons why I think I'm going to remove it from our portfolio. One is I've lost a little bit of confidence overall in the project, which if that is the case, then I shouldn't hold it in our portfolio for any longer. I was very positive on the project throughout 2017. Even during the bear market of 2018 and 2019, I thought that it was going to have a good revival, because I thought that there would be a lot of demand for these types of privacy coins, and to be able to make kind of discrete crypto payments. However, it hasn't really come to fruition, and we've seen a massive drawdown in the Dash prices. So I think it is time to remove it from our portfolio, and I want to use that small amount of money that's left, because there's obviously been a huge drawdown in that cryptocurrency, but I want to use it to put into other projects which I think have a lot of potential and increase the stake in our current crypto holdings that we have. The second reason why I want to remove Dash from our portfolio is that it's quite clear that there is quite a large desync in terms of copiers. So because it was a fairly large position in my portfolio originally, and now it has drawn down, a lot, over 90%, it now makes up only a very small part of my portfolio, but a larger part of my copiers portfolio, especially those who have copied fairly recently over the last couple of months. So I do not want that large desync, and I don't want you to have larger exposure to the to Dash than my portfolio has, for example. So I think it is time to remove that and then open up positions elsewhere in my crypto portfolio. However, the other cryptos that I have in my portfolio, I'm very positive on for the long-term future, and it is very unlikely that I'm going to make other changes to our crypto portfolio in the near future. Thank you very much for listening to my video today. And please also don't forget to join my Discord group. We have a really awesome group of people that are having discussions every week, every single day, about what's happening in the markets. It's good at the moment, especially because people are talking about some of the tough times, and being able to talk with like-minded investors and being able to ask me any questions is also very positive in these times of fear. So I really want to say that try to stay as patient as possible as you can, not only in my portfolio and in the markets. It's very clear that what's happening in the market at the moment is very doom and gloom. Sentiment and fear is very low at the moment in the market, but please consider the opportunities that are starting to arise. And it's a really good time for you to dollar cost average into our portfolio, because you are effectively getting much lower entry prices. And when things start to turn, it's going to be a lot quicker for you to move into profit in the future. So please consider that. And also the other thing to consider is that the market is very volatile at the moment. So please make sure that you keep an eye on your stop losses and don't make them too tight, because what might happen is you may get stopped out on your copy position, and then a week later, 2 weeks later, then we see a big snapback overall in the market, and we see rising in stock prices and other asset classes, and then you are left on the sidelines with realized losses. So thank you very much for your trust in me, and I wish you a good week ahead.